Hello, everyone. I'm sure a lot of people have already heard about Ghana stock market. Even some people are already trading in the market, buying, selling, but don't necessarily understand how the market operates and what is going on. Right. So today we are going to break down what Ghana stock market is and how we can successfully place orders. So if you want to benefit, I would want you to watch through to the end. Now, to go deeply into this, I want us to analyze this scenario, right? Now, let's imagine that you want to start any business. Let's say here, Chop Bar that we are doing. You want to use 10,000 to start. Honestly, you don't have 10,000 sitting somewhere. So what you can do is that you ask about 10 people that, okay, let's contribute so that each person brings 1,000 cities. At the end of the day, you have 10,000 cities without you having to raise the fund alone. What it also means is that each person has a share or each person has part of the business that is running. And in that case, if there's profits, you can either share the profits or reinvest back into the business. This is exactly how companies operate by giving out shares so that investors can bring money for them to equally operate. So now that we have the basic overview, let's try to understand what the Ghana Stock Exchange is. So the Ghana Stock Exchange is a regulated body. So it's not just a one person or private entities. So it's a regulated body that provide more or less like a marketplace where companies can go list their shares and then investors can go buy and sell. So think about it like there is a buy and sell going on, right? But then they create that safe space so that this trading or this buy and sell can happen in orderly manner. Now, the exchange manages two different indices, right? So we have the one that is solely on the financial stock index. So that one caters only for the financial sector, any companies in the financial sector. And we have the composite, which entails every company that is on the market. Now, the biggest question is why do companies even sell shares in the first place? So, we've been hearing a lot about shares, but then let's try to understand why companies actually sell their shares. So, one of the main reasons shares are being sold is the fact that companies want to raise capital for whatever reason. However, they don't want to fund it by themselves. So then they put out their shares so that people can also own part of the company in exchange for capital or in exchange for money. So that's the first thing. And another thing is to also boost their credibility. Mostly when companies are on the Ghana stock market, what happens is that people see how credible the company is, especially if the company is performing well. And for that matter, it also indirectly affects their performance or how people patronize them. So I'm sure one of the questions now is how is this market being regulated, right? So at the apex of the market is the Securities and Exchange Commission. So this is not like one person regulating, this is a whole commission on its own, like the exchange commodities, right? So they oversee everything and everyone on the market. So for instance, if companies are listed, they are expected to verify and make sure that these companies have what it takes to be on the market, right? They make sure that companies are putting out reports and then everything that investors needs to see, right? So they ensure that everyone on the market are going through the compliance and everything. Now we have another people on the market who are called the brokers. So these are licensed companies or dealing members, right? So the market allows only registered or licensed brokers to trade on behalf of individuals. So for instance, if you want to buy stocks right now, you can't just go to buy on your own. So what you do is that you choose a licensed broker, then who helps you in buying. Most of these licensed brokers directly help you to create a CSD account. So this is a digital account where everything you buy sits. However, some companies don't directly create that, so you have to do your research. So some of the popular brokers that are available currently, we have the Black Stars, we have the IC with, and then we have the Data Bank. So you can find a lot. There are about 32 registered brokers that you can find at the sec.gov.ga to read more about them and then choose which one you would want to trade with. So now that we actually understand the theory, the overview about Ghana Stock Exchange, who regulate it and everything, the question is, how does the market works, right? So this is like a Makola market. Just imagine Ghana stock market as the Makola market, right? But instead of maybe selling vegetables and the rest, what are being traded is shares. So what happens is that when companies put out their shares, individuals buy the shares, and now the individuals are the ones holding the shares, so they can choose to sell or to keep for a while, right? So there are some rules that affect how the market operates, right? So how, let's say you buy your order or you place an order for your shares, how are these matched? So there are two rules. We have the price priority rule. Like going to the market, if there are two buyers, the seller always wants to make profits, and you, the buyer, you want every day you want to cut down costs. So what happens is that every time the seller will want to sell to the one with the best price. The same way the buyer would want to buy from the one with the best price. So that's the first priority. That's the price, right? So the one that comes with the best price, your order gets matched first. Another thing is also about the time. In a case where everyone comes with the same pricing, let's say if it is 10 cities, everyone is buying at 10 cities. In that case, what happened is that we use the first come, first served approach, where the ones that place the order first get their order executed or get the shares first. In that case, the price is the same. But whenever price are different, it means that even if I come today, you came 2 weeks ago, my price is better than yours, and for that matter, mine will be executed. So just as simple as that. So one main important things that you need to consider when choosing a company that you want to buy stocks from is dividends. So the question is, ask yourself, does this company give out dividends or not? But then what are dividends, right? So at the end of every time frame, companies choose to give out dividends. That's they are sharing part of the profits they made to shareholders. So back to the scenario we give from the beginning, when you are setting up a company together with friends, right? When you make profits, you can choose to share some of the profits, or you can choose to invest back the money. The same way on the Ghana stock market, some companies choose to share some of their profits with shareholders, whilst others will want to reinvest back the money so that they will come back stronger, right? So I will say that every time that you are buying shares, look for companies that at least give dividends. So at the end of the year or sometimes mid-year, you are able to get some form of money, right? So some companies, for instance, like the MTN, GCB, Benzo Oil, SIC, and the rest have been giving dividends very consistent, right? So you need to look out for that. And then we have something called dividend per share. So before the dividends are given out, they mention the amounts that they are going to give per each share. So for instance, if you have 10 shares with a company, they can say they are giving 10 pesos shares dividends per each share. So it means that you get for each shares that you are holding, you are getting 10 pesos. So you just multiply 10 pesos by the shares number you are holding, right? And then some companies also give interim dividends. So before the actual dividend, they give some interim. It can be mid-year, it can be even quarterly dividend. So you need to do your research and make sure that they are giving. So this is some of the free money you can get, right? Most companies or every company give their ex-dividend date. That means that you should be holding their stocks by that date. So it's like they are setting deadline, because whenever companies announce dividends, a lot of people start going to buy that company because they are getting like dividend, right? So you need to hold that shares latest by that deadline. So that's what you need to know. So when you're buying every company, you need to look out for this. But for every investment, we know there's money, or you can also lose. So the question is, in stock exchange or on the Ghana stock market, how do you actually make money? Right. So the main thing that can give you money, one is the dividend, right? If by the end of each year or mid-year, companies are giving out dividend, it means that every year or every mid-year, the number of shares you are getting, you have is getting some number of money or some number of profits. That is one. Another thing is capital gain. Capital gain is, for instance, let me give you a scenario. Let's say you bought the shares when it was 1 cedi. Now, tomorrow you woke up and the shares is selling at 2 cedis. It means that now your shares has moved from 1 cedi to 2 cedis and you've gained 1 cedi on each share you are holding. Imagine you have 1,000 shares. It means that you've gotten 1,000 cedis in a day, right? So this is one thing that actually make a lot of money. Don't forget that this is equally the same as when the company is going down, right? When the prices also reduce, you lose that same amount of money. So it's like it cuts on both sides. So you need to pay attention to that. So you have two streams of making money. That's why you need to look for companies that are giving dividends, right? Not all companies on the market give dividends. So when you are doing your research, you look for at least companies that are giving dividends such that even if there's not a lot of market gain, you are getting dividends. So I've been talking about the prices going up or going down, but have we stopped to think about what affects the prices? That's very critical. If you understand this, you know how to place your orders and what to look out for, right? On the stock market or any other stock market, prices are solely dependent on supply and demand, nothing else. Nothing affects the prices on the markets except supply and demand. The same thing on any regular market. When you go to Makola market or any other market, the only thing that affects prices is supply and demand. Right. Let's go deeply into it. And you at the end of this, you understand really what we mean by that. Right. So for instance, let's use economic indicators. Right. Let's say the Bank of Ghana has some policy, let's say on treasury bill, bonds, and etc. If they are raising their percentages high, let's say when you put money in bonds, you get like 50% at the end of the year. A lot of people are not going to buy stocks because bonds is risk free or low risk. At the end of the day, you are not losing money, you are always gaining money. And for that matter, people will want to push their money there, right? It will make the demand on the Ghana market very low. And when demand is low, it indirectly affects the pricing because everyone is selling their shares so that they will get money, go and buy the bond or treasury bill, right? So if everyone is selling something on the market, the price automatically goes down because you need to set your price lower so that someone coming to buy will buy it at a lower price. So that's the demand and supply. The same thing for exchange rates. A company that imports goods or exports goods, one way or the other, is being affected by exchange rates differently. When companies publish, let's say they publish their annual review and investors realize that no, their profits are going down because of exchange rates, a lot of people start selling. If their profits are going up, a lot of people start buying because they know this company is performing well. And for that matter, it would indirectly affect the pricing, right? Let's go into another thing like news and events. When companies announce, for instance, that we are coming to give dividends or we are going to build new factory or we are having new projects, what happens is that investors will read into this and now project 5 years to now, right? And see that, okay, there's prospect in this company, so let me buy more. The more people are buying, it means that the demand is high. So everyone holding that shares will increase a price so that people will buy. And for that matter, it indirectly affects the market price, right? So it will push the price up. The same way, when there's no dividend or nothing is happening, people start selling their shares. And if everyone is selling, the same thing happens, right? Another thing is also about companies' performance. When companies are performing so well, it gives investors confidence that okay, this company has like very good trajectory. So let me put more money in. When more money is going into it, it means that more buys. When more buys and there's not enough on the market, those that are having currently will increase their prices. And this means that the price is going to be higher. So it pushes the price up. When everyone is selling, the price needs to come down because everyone is selling the same shares. So you need to reduce your price. So individually, everyone would reduce their price and automatically the market price will be reduced. So I'm sure this makes too much sense that the market is being influenced by supply and demand. So if you are able to read well into this, you know when is the good time to buy a particular stock, when is the best time to sell a particular stock, etc. So one main factor a lot of people actually overlook is how to evaluate a particular stock before buying. Mind you, a lot of people on the market are just gambling or buying as a result of fear of missing out. A lot of people are talking about particular stocks, so let me just go buy some, right? But then, mind you, you don't know about my investment goals. You don't know about other person's investment goals, and for that matter, you just don't have to follow blindly. So let's go through some factors you need to look at when you are buying stocks or when you are starting out, right? So one thing is price to earning ratio, which I think is really, really important. A lot of people don't pay attention to this. So for instance, you see two stocks, one is selling at 5 cities, one is selling at, let's say, 1 city. Technically or psychologically, you see the one selling at 1 city to be cheaper than the one selling at 5 cities. But if you are to compare to their peers on the same sector, etc., you realize that the one selling at 1 city is way, way expensive compared to the one selling at 5 cities. So you ask yourself, these shares that I'm buying, how much am I paying for each one CD of the company? And you realize that you are paying a lot, right? So you need to look out for that. There is a whole math behind this that you should read about. When you go to the Security Exchange or the Ghana Stock Markets website, you should be able to find a price to earning ratio for most of the companies that are listed to be guided. Now, another thing is also about earning per share. Right. So you are not just buying the shares, you want to see is this shares profitable? Right. So you look at over past months or years, like let's say 3 to 5 years, to see how profitable the shares are. Right. So you should be able to look at what profit does this share that I'm holding, each share that I'm holding, what's the profit on it? Right. Another thing is also about dividend yield, right? So each shares that you are holding, how much dividend is it yielding? So you should actually understand. As I mentioned, when you are looking for companies, you should be able to look for companies that are giving dividends or they have a good trajectory into giving dividend, right? Another critical thing is about revenue growth. Mind you, investors actually look at this. If I say investors, I'm talking about the bulls, those that are putting a lot of money in there who actually influence the market, right? They look at how the company is growing. If companies are not growing, a lot of investors don't get confidence in them, so they start selling their shares. And if these big people start selling their shares, mind you, the demand of this gets lower and lower, and then the price starts dropping. Now, you need to also look at their debt to equity ratio. Company is selling shares, but have you asked yourself, are they owing money compared to the shares that they are holding? Let's say the total shares that they are selling out is, let's say, 100,000. 100,000 is too small, but like, let's give a value. But then they are owing debt more than this value. What it means is that the company is in debt. So you need to look out for this, right? You need to actually understand. The last thing to look out for is management quality. Mind you, anyone you are giving your money to, you need to look out that these people are not under any fraudulent activities or they are not doing any sort of mismanagement, right? Because when investors see this, it's a red flag. They start selling, and which is going to affect your shares as well. So you need to look out for these factors when you are buying shares. Another thing that you need to understand is that this is not a risk-free type of investment where you just put your money in at the end of the year you count for interest. So I mostly get comments or people asking me that, so if I put 1K cities or if I put 10K cities at the end of the year, how much will I make? There's no clear money to make at the end of the year. It's about the market, so you need to understand the market. So there are a lot of risks that you need to understand before you enter fully. So there's a market risk. Mind you, the whole market can crash. Let's say economic factors. There can be political factors. There can be a lot of factors that will affect the whole Ghana market. But then currently, the Ghana market is the second best performing market according to the Bloomberg report. So it's a good thing, right? Another thing that you need to look for is about company specific risk, right? Mind you, some of the companies that you're investing in can collapse automatically, right? So you need to look out for that. You need to actually research about that. So there has been a lot of scenarios. For instance, when AI came up, there are companies on the US market that got collapsed, moved from over $100 to less than $1. So you need to actually understand what you are doing. There's also liquidity risk. This is one risk that a lot of people don't talk about enough. You can be holding shares. Let's say you have 10,000 shares in a company. You want to sell, no one wants to buy. There's no liquidity, right? So when buying, don't just buy shares because, oh, this is cheap. It's 10 pesos. Let me buy. No, you need to look for shares that you are sure people will be buying when you want to sell, right? Because maybe because you got it faster means that a lot of people were selling their shares. No one was buying. So the moment you place the buy order, you get it. So you need to understand this. And then the other thing you need to pay attention to is concentration risk, right? You wouldn't want to concentrate all your shares in one sector or all your shares in one company. You need to strategize such that when there is a market crash in a sector or on a company, you are able to get money from somewhere, right? So for some of the risk or most of the risk, you can actually manage them or you can play it safe. For instance, if you are able to diversify your portfolio, right, you are not buying only one company or you are not putting too much money in only one industry or only one sector. What happens is that let's say there is a economic or political policy that's affecting one industry or one sector, the other sector might be benefiting, and for that matter it cancels out. So you need to actually look into that. There's also one factor about time in the market, right? Sometimes the longer you be in the market shows how much money you are going to get in the market, right? So you need to also look out for that. The next thing is also about the 20-25% rule, which states that you shouldn't put too much more than 25% in a market, right? Unless you've actually researched and understand the market. Because if that market starts collapsing, it means that more than 25% of your money is going, right? So you need to actually understand. The last critical point is also about the dollar cost averaging, which I call the CD cost averaging because we are doing the Ghana stock market, right? The CD cost averaging states that, for instance, let me use a scenario here for better understanding. The price of a stock is at 10 cities, right? And you want to buy, let's say, 1,000 shares. One person can buy the 1,000 shares at a go, done. Another person will buy only 200 at the 10 cities, especially when the price is going down, right? When the price reduced to, let's say, 9 cities or 8 cities, 50 pesos, the person buys another 300. The price reduce again to, let's say, 7 cities, 6 cities, 5 cities, the person buy 500. At the end of the day, if you are doing the averaging, you realize that the person is around 6 cities, 7 cities price compared to the person that bought full on at 10 cities. It means that I will make more money or more profit or more interest compared to you that bought it at the apex, right? So you need to strategize, especially when prices are going down. So I am sure you've been able to learn in depth about how the Ghana stock market works, what it is, how to even look at some companies, what to consider when you are buying, how prices are being even affected, etc. This is good, but this is more theoretical or this is more concept based. Now, how do I buy? In our next video, we'll be talking about account setup, how to buy, sell, how to understand everything step by step approach. A lot of people place account setup and then it takes more than months and years to get the account set up. How do we optimize this to get your account set up within 2 weeks, 1 month time, or the shortest possible time? The documents you need, and when buying, what are the things you need to look out to know that this is the right time to buy a particular stock? All these we are going to talk about in our next video. So kindly subscribe to our channel, follow us, hit the bell button such that you get notified when we release, and then make sure you join us in our next video so that you become the next investor and the next pioneer. See you there.